What I'd have here for you today is some of the questions that I've been asked by the new buyers. I'm going to act like I'm the new time buyer, first time buyer, never bought a house before.
Okay.
So, sticking with the subject, remember I'm a first time buyer. I don't know all the answers. So I was told that I need to have 20% down payment in order to buy a house. Why should somebody tell me 20%? And do I need to have 20%?
No, you do not need 20% down to buy a home. Again, it goes back to mainstream media. I mean, it does. I mean, that's what they put out there on a national basis. But guys, we're buying in one of the best markets here in Texas, one of the best markets in DFW. You do not need 20% to be able to buy a home. Conventional, you can do it with as little as 3% down. VA and USDA, no money down. FHA, 3.5% down. That's his minimum down payment that you need per those types of programs. And don't fret, if you don't have that money, guess what? We'll go access the funds to the state of Texas. You don't even have to be a first-time home buyer to access those funds, okay? We can go get it, and then it'll cover the down payment. And again, guys, we can cover, for a veteran, all your money. USDA buyer, all your money, closing costs included. For a lot of the conventional and FHAs, we can cover the down payment for sure, and then if there's enough money available, we'll cover the closing costs.
So how long do I need to be in my current job to be able to qualify for a mortgage loan?
Your current job?
Yeah, if I change from this job to this job, and it's a new company, and I've been there for, let's say, 3 months, 4 months, do I qualify for a mortgage loan?
Yeah, absolutely. So if you're transferring, or let's say you're transitioning and transferring from, let's say, Tennessee to Dallas, right?
Exactly.
Couple of different ways we can structure that, Elwin, okay? You don't even have to be on your job exactly to buy. We just have to have validation from your new company, okay? Let's say you're getting a brand new job and you're moving here. We have to have validation from your HR department and your new company that your start date is within 90 days of your close date.
Okay.
Okay? That there are no conditions to your hire, meaning you don't have to pass a drug test, you don't have to get a type of license or anything. That you've been basically fully hired and your start date is within 90 days of our close date. And at that point, we're good to go to be able to purchase a home. But let's say you're transitioning and you just transitioned to your new job. Okay, you just started your new job. We need 30 days of pay stubs to be able to validate your new job. So, because we want to make sure your hourly wage is exactly what it's supposed to be. We want to be able to document your salary is what it's supposed to be because you've already started. So it's either 30 days or we have an HR letter upon your new hire that starts within the first 90 days of closing.
Okay, so normally when I am taking clients to see houses, if they buy an existing home, from the time we execute a contract to closing time, it's approximately 30 days.
Okay.
And a lot of time when that happens, we'll lock the interest rate, we close,
Sure.
Everything's good. Now, when I have a client that wants to build a home, and it's a new build, and it's going to take about 10 months to build, when is the right time for us to lock that rate?
Okay. So the right time to lock the rate is based on my advice to them and what the market's doing. So I'm always, guys, in the markets. That's where I spend the majority of my time, is understanding what's impacting interest rates. Like, for instance, is there something on the global outlook that's like right now we're talking about China and the trade wars and all those kind of things. How is that impacting interest rates? A lot of times when you see uncertainty in the global markets or the stock market, that means there's money that moves to the bond market. Okay, the bond market is a safe haven for money. If money's moving there, interest rates are typically in a good position and they're coming down. Okay, and I'm going to be making suggestions and advice to clients to say, look, I would advise you to float because we may be able to get a lower interest rate, or the cost that you're paying for the interest rate that you want is going to become less. Okay, so I'm providing guidance to you guys on that. At the same time, if I'm seeing the market reacting differently and we're in a really strong position and the stock market is really in a good place, that means money's going out of the bond market into the stock market, which is then causing interest rates to rise, we're going to protect that rate by converting it to a lock position. So that's on either regular build homes that are out there or new builds. Now, the trick with a new build, though, is timing. We need to know when that home is going to be finished because our lock has to go past closing date. So it's really important for us to know when that builder is going to be finished with the home so that we can actually lock it in time. So you can do a 30-day lock, a 15-day lock. You can do 60 days, 90 days. We can do 120, 240 days locks, but we need to make sure it covers the closing date.
So I thank you because you have taken the time to process or explain from the beginning the pre-approved versus pre-qualified, how to start the process, and everything associated with the process to the entire loan mortgage process, including when to lock the interest rate.
Yes, sir.
So now I think I'm ready to make a decision, but my clients always ask me the magic question at the end of the entire process, and that's the last question I have for you today.
Okay.
Is it better to rent for a year and save more money and then buy a house the following year, or buy today and not rent for a year? That would be the question.
Oh, wow. Well, the easy answer is it's definitely better to buy today than it is to wait a year. And I'll kind of go into this. And it's not going to be the same for everyone. It's going to be by circumstance. And that's why I always encourage you to talk to Elwin, talk to me, and we're going to provide you honest guidance. I mean, we really will tell you based on your particular situation, should you wait or should you buy, okay? But the majority of time, if you're in the position to buy, with as low of the down payments that are out there, 3%, 3.5%, no money down payment assistance and grant programs that will even cover the down payment, money is not going to be your issue. We have ways to get you into a home with little to no money out of pocket. So then we have to look at appreciation. I mean, if you pass on buying that $250,000 house today because you want to save up for a 5% down payment or a 10% down payment, or because you heard that you had to have 20% down to buy a house, so that's what you're trying to save up to, well, that $250,000 house could now be worth $275,000. Well, you just lost $25,000 right there, just like that, because you thought you had to save up enough money because you wanted to avoid mortgage insurance. Guys, we can avoid mortgage insurance with a 3% down payment. We can avoid mortgage insurance with a 5% down payment. So the biggest thing is you need to talk to an expert. You need to talk to us to give you proper guidance so we can determine why you're thinking you need to wait, so we can tell you don't, or we'll truly tell you based on what your credit score is or based on your temporary job status or whatever it is that you do need to wait a year.
Bob, again, thank you very much for always making time for me, answer all these tough questions. Clients always asking this question.
Yeah, you're out there. I mean, you're in the market. You're talking to a lot of people. You do amazing things that are out there, and I know you get these types of questions. So I appreciate you coming to me. And guys, that's why we do these things. We don't want you to listen to mainstream national stuff. You got to listen to the local market leaders. You got to listen to us because we're in these markets on an everyday basis, talking to people in this market right here. So good job, man.
I appreciate it, my friend.
Yeah, take care.